Ladies and gentlemen, happy Wednesday. This is Christopher Aaron. It is the 18th of January. Let's update on the precious metals action from where we were last week. Now, the important thing that crossed my desk over the last week or so is an article that was on a recent Bloomberg magazine. And the article had this headline, which was, "Where to Find the Biggest Market Moves of 2017." And I found this really incredible from the perspective that I'm in, having followed this market for a number of years, that the options market is pricing in that the precious metals equities are going to be the most volatile sector in the economy, in the entire world, in 2017. So here what we're looking at is, of all the different sectors in world stock markets, options writers, which are investors, usually some larger investors or funds who write options contracts, who build into the value that they charge to purchase an option. They build in what is called this volatility premium. And you can see that right here. So on a contract for the GDX, for example, going 1 year out, a January 2018 contract, you're looking at a 34% premium that you have to pay just to own that contract. And for the GDXJ, it's even higher, 44%. So I just find it very interesting here. We're talking about one of the oldest industries in the world. I mean, gold mining, right up there with agriculture and seafaring and perhaps prostitution as some of the oldest industries in the entire world. Yet this one has, for 2017, been labeled by none other than Goldman Sachs and Bloomberg as the most volatile expected in the world. So if you are investing, or if you're just starting to learn about this sector, this is going to be kind of a trial by fire year for you, I believe. It's going to be very interesting to watch. There's going to be a lot of opportunity, but it's not going to come easy. So back to where we were this time last week, I wanted to update you guys on this chart. We are looking here on the top at the gold mining complex since the 27th of December, here on the price of gold as represented by the GLD fund. And I do this kind of comparison quite often where I just look over multiple time periods, mind you, and I'll look at this ratio over a minute by minute time frame. I'll look at this ratio week by week, year by year, decade by decade. So all I'm showing you right now is the last 3 weeks or so. Just keep that in mind. But anyway, for the last 3 weeks, you can see here the GDX fund has closed right under 23. And all you do is you draw back on a horizontal line from 23. When was the first time in the most recent move that GDX closed at 23? You could see right here it was on the 5th of January. So you say, okay, basically the GDX hasn't moved as a sum since the 5th of January. Meanwhile, if you draw it down from the 5th of January, where was gold or the GLD fund? It was all the way down here around 112, 112 and a quarter. Whereas right now it's still up just below 115, even with the drop that we saw today. So still this negative divergence is holding, and this is one of those signals that I use to trade one or the other instruments that I do trade from time to time. So I'm just kind of giving away one of the indicators that I look at here. This is one of the indicators. You can't necessarily trade this just on its own. You need to combine this with several other indicators here, especially focusing on the price action and the underlying metal itself. Okay, so this is usually giving me an early warning hint. That doesn't necessarily mean that it's due to manifest this day or next day. So what does this mean? Let's look at this over the last few days for the prices here, and then we'll talk about a little bit of a longer term perspective. So we are seeing here gold, over the last 3 days, it had come back over 1200, spent one day coming above 1200 here, closing at 1215, kind of giving everyone a signal, hey, maybe it's looking to advance above 1200, and then what do you know, giving that all back today and falling below 1200 right now. We'll see what happens in the overnight session in Asia. But this is the kind of day, and you can especially see this when we switch over to silver here. Let's look at silver. This is what you would call an outside reversal day, to use that technical term. So you're talking about a day in which it makes a new high and then closes back lower than yesterday's close. This type of move on a short-term basis tends to correspond with short-term tops. You tend to see this as a reversal pattern. That doesn't mean it has to start reversing tomorrow. Sometimes it can continue to consolidate for 2 or 3 days. All else being equal, this looks like a short-term top to me. I do, however, reserve the right to alter that, of course, if the market tells me different. I never get wedded to any one position here in the short run, especially. So if I put on a short-term trade and the market shows me that it's not ready to move in the direction that I thought it would, basically immediately I will cut that trade and take a small loss, maybe half of 1% or 1%, and then just step back and move on. So just know, if you're listening to these videos, let's say on a Wednesday night, and next Monday or next Tuesday, the market moves in the opposite direction from what I've discussed here on a Wednesday night, a lot can happen in between then as far as the ins and outs of managing a short-term trading portfolio. That's some of the stuff that I get into in the premium service, the actual trade alerts as they're issued. So looking at my outlook here now, let's as we're getting into the first 2 full weeks here in trading in 2017, I would say that in the short run, over the next 4 weeks, I am bearish on the price action in the metals. I do think we could be looking at a little bit of a correction here. We will see how far that goes. I think there's quite a strong possibility that the metals have put in their absolute low for this decline, but I reserve the right to alter that here over the medium term. Over the short run, I do believe that this divergence that we're seeing is setting up for a bit of a drop here over the next several days to several weeks. Medium term, I'm talking 12 to 18 months, I'm really quite neutral on the precious metals, and I think that's going to be defined by a level of volatility that scares a lot of people out of this market before the big moves actually start within maybe the next 12 to 18 months. And I think this is going to be the kind of action, this up, down. You could see a $75 surge later on in the spring, followed by a $150 drop again, followed by a $200 surge, followed by a $100 drop in the price of gold. And of course those gains are going to be, and the losses will be amplified by the mining complex. So this is kind of how I think a market starts off a new bull market. Bull markets don't start by having everyone very enthusiastic about it and being very easy. Bull markets get their name because, like riding a bull in a rodeo, they try to throw off as many people as they can in the beginning and take as few people along the way. So I do think, though, that the medium term, 12 to 18 months, is an excellent time. If you're looking at a medium or long-term strategy, this is an excellent time to be making your list of mining equities or strategies that you want to pursue to invest over the bull market that I believe is going to be evolving here over the next few years. This is the list of companies that I monitor. I follow about 150 companies on a regular basis, and all that information is what I compile for myself and that I share with people who are interested in that. Long term, I do want to reiterate, on the physical metals themselves, I am quite bullish. And I really do think that having a core position in the metals is one of the most important things that you can do for an X factor, for a black swan event, if that were to occur, but also for the peace of mind that then allows you to consider some of the medium and some of the short-term strategies here, either trading or investing in the mining sector, if you have a nice core position that you can promise yourself you are not going to touch no matter what happens, and maybe even if you are betting that in the short run the price is going to go down, you might still be accumulating physical metal in the long-term portion of your portfolio. That is exactly what I do. And I find that it really helps to keep a clear outlook when you can separate in your mind multiple strategies here with the same asset class. Thank you again for watching this evening. The next update will be a week from now. I do provide, as I mentioned, a premium research service for individuals who would like to get my in-depth analysis on everything that is happening whenever it happens through flash updates and weekly updates. This covers physical gold and silver, the GDX, and individual miners, along with the exact buy and sell signals that I am using myself here and for some private clients that I do manage some funds for. I also do individual consultations by voice and by email if your situation requires an independent, researched perspective from someone that is not just going to constantly tell you to buy, buy, buy. I'm not associated with any of the companies that I cover. I'm not associated with any companies that are just looking to sell you bullion, so I do try to provide an independent perspective. Thanks again, and I'll see you this time next week.